Hello, this is Matthew's Bitcoin strategy. How much Bitcoin do you really need? Do you need 0.01 Bitcoin, 0.1 Bitcoin, 1 Bitcoin, or simply an amount that fits your budget? There is no universal answer. The right amount depends on your income, financial goals, risk tolerance, debts, savings, retirement plans, and other investments. Matthew takes a simple approach. He has been investing in Bitcoin since June 2017, putting $60 into Bitcoin every 2 weeks. His purchases are automated, so he doesn't spend his time trying to predict the market or find the perfect buying opportunity. Every 6 months, Matthew checks the value of his Bitcoin using the Bitcoin calculator at calculatology.com. He isn't checking because he plans to sell. He simply wants to see what his accumulated Bitcoin is worth and compare its growth with his other assets. How much has Matthew invested? At $60 every 2 weeks, Matthew invests approximately $1,560 per year. From June 2017 through August 2026, he has contributed roughly $29,000, assuming he maintained the same schedule. Because he purchased Bitcoin at many different prices, his $60 bought more Bitcoin during lower price periods and less during higher price periods. Using a rough historical dollar cost averaging estimate, Matthew could have accumulated approximately 1.2 BTC. That is only an estimate because we don't have his exact transaction dates, purchase prices, fees, or exchange records. At an assumed Bitcoin price of approximately $79,000 to $80,000, 1.2 BTC would be worth approximately $95,000 to $96,000. That means Matthew may have contributed around $29,000 over nearly 10 years while potentially accumulating Bitcoin worth around $95,000 today. The actual amount could be different based on his real purchase history. The power of consistency. Matthew's strategy demonstrates the potential value of consistent investing. His $60 purchase doesn't sound like much by itself, but repeated every 2 weeks for almost 10 years, those purchases can become significant. When Bitcoin is expensive, his $60 buys less. When Bitcoin falls, his $60 buys more. He continues regardless of market conditions. This approach is commonly called dollar cost averaging. It doesn't guarantee profits or prevent losses, but it can help investors avoid constantly trying to predict the market. Matthew doesn't have to wake up every morning wondering whether he should buy. His plan is already in place. Comparing Bitcoin with other assets, Matthew doesn't view Bitcoin as his entire financial plan. He compares his Bitcoin holdings with his other assets, such as retirement account stocks, ETFs, cash, real estate, or other investments. This gives him a better understanding of his overall financial progress. If Bitcoin performs well, he can see how much it contributes to his portfolio. If Bitcoin falls while other assets rise, he can see that too. The goal isn't for Bitcoin to outperform everything every year. The goal is to understand how each asset contributes to his overall financial position. How much Bitcoin do you need? You don't necessarily need one whole Bitcoin. Bitcoin is divisible into 100 million Satoshis, allowing investors to accumulate small amounts over time. One investor may target 0.01 BTC. Another may target 0.1 BTC. Someone else may want one full Bitcoin. The important question isn't, how much Bitcoin does everyone need? It's, how much Bitcoin can I responsibly accumulate while continuing to build my overall financial future? You don't have to own one Bitcoin to participate. You don't have to invest thousands of dollars at once. Sometimes the most important part of an investment strategy isn't how much you start with. It's whether you can remain consistent. Disclaimer: this article is for educational and informational purposes only, and is not financial, investment, tax, or legal advice.